In this video, I'll reveal a simple yet effective scalping strategy that works every single day. The strategy doesn't rely on any indicators or doesn't require long preparations. It's completely rule-based. All you need to do is follow a simple 3-step checklist before entering any trade. And to show you that the strategy is consistently profitable, I'll show you a real trade example that I took at the end of the video. So let's get into it. Step 1 is identifying market context or structure. So basically we're looking for trend direction. Again, this can be on the higher time frame like the daily and the weekly. However, for intraday setups, we're looking at the 4-hour and the 1-hour to see the overall market direction or where the majority of traders are looking to take the market to next. So for example, if we're having higher highs and higher lows, the majority of traders are looking for continuation of that. However, if we have bearish structure, traders are looking for a continuation of that as well. So like price coming up into a bearish range, doing a retracement, then they're looking for a sell to take out the previous low. So again, this is liquidity building up. So that's what we need to look for in the markets, liquidity building up. And that can be in the form of many different things such as support and resistance, supply and demand, trend lines. But basically when we have bullish structure with a demand zone, we know that especially if it's lower in the range, we know that there's a lot of traders looking for buys off of that demand. So we look for reasons to take that liquidity. As you can see in this example here, where price takes the liquidity from the demand. We have a demand zone, price reacts to the demand, and then we take the liquidity, making a low. We then have what? Bearish structure. So we know that the majority of traders looking to short from supply zones. Price has a reaction from supply, we can long into that, do an inducement of that supply, and everyone else is left confused, but not us, because we're understanding that it's all liquidity building up in the markets. If we can spot that, then we can have some really high probability trades consistently. So the action steps for step 1 is essentially we're going to zoom out to the 4-hour, mark out your highs, your swings and lows, basically just understanding the structure that we have. Again, we can scale down also into the 1-hour and the 15 at this time as well, and just kind of understand intraday what we are going to be looking for. So again, if the 4-hour, 1-hour, 15 is bullish, it's a very good selling opportunity for us because a bearish breaker structure will take out a lot of traders. And again, identify if the market is trending. So we like trending markets. We like when we've had a few ranges where we have highs, lows, higher high, higher low, higher high. So it just shows that liquidity is continuing to build up. Not only that, but we're probably going to start to build a trend line underneath price as well, which is just adding to the liquidity. Identify, so then we want to mark out our zones. So equal highs where there's stop loss liquidity above. When you have equal highs, of course, the money is sitting right above those highs. We're looking for the market to take that. Equal lows is the opposite. So there's stop loss liquidity sitting below those equal lows. Then we have a supply zone where a strong sell-off originated from. And again, when price returns to that area, a lot of traders now starting to look for a sell. So again, liquidity building up. It's also a resistance zone as well. So liquidity is building up above price where everyone else is looking to actually sell and go the other direction. This is a great sign for us to actually look for a buy. And a demand zone, so the opposite thing, where a strong rally originated from. Now, when you have that strong rally, we can look to sell into that. Amazing. This is a 4-hour chart just for some context. So first thing we see, price makes this low here, and then a high. We then have a higher low and a higher high. So again, this is an area where a lot of traders look to buy from, and you can see price just rockets through that. We then have a lower high. So again, we start to form some bearish structure. There's our bearish structure. Here's our lower low, which is another bearish break to the downside, meaning we have a range from this high to this low. Now, what that's showing us is now there's a lot of sellers around here. So we want to potentially look for a reason to buy and take that liquidity out. Again, when all that liquidity forms, price really wants to come in and juice those highs and lows, leaving a lot of people confused, but in our eyes, it gives us a very, very good opportunity. This is a 1-hour chart. So same thing, but it's just zoomed in a bit more where we have the bearish break. Of course, after we have this bullish range which breaks this previous high, we have a lot of sellers coming in here. What does price do? Melts through it. That is not an accident. Then it comes up, creates a lower high, follows with that bearish structure to make a lower low. And then this is where we know all the sellers are going to step in. We can also buy at lows of ranges. We have certain confirmations that we want to look for to be able to do that. This is not for, we're not going to get too technical right now, but basically when price does come up, reacts from this supply, people assume that price will follow the bearish momentum and make a low. But it's an opportunity to take that out because we have the supply zone, we have resistance zones. I draw a lot on my screens, but I'm very passionate about this, and I just want to really drill this into you guys so you fully understand the context. Step number 2 is finding an entry trigger. So the goal is to wait for structure confirmation before entering. Of course, we have a break of structure. So break of structure confirming price will go higher in a lot of people's eyes. We have retest confirmations as well, and where many traders are entering, which is a resistance level and a support zone. We also have liquidity traps and inducements, which we've spoken a lot about in previous videos. So definitely go watch my other videos and keep moving from there. So here we have price action. We have a low, a higher high, a higher low, a bullish break of structure, which creates a higher high. So the range from this low to this high. What do we see next? Well, a supply zone. So again, any reaction from supply is when we can look for a sell. So when price reacts from that supply zone here, gives us our entry model to actually enter a sell, go against the herd. We can take a trade into, again, extreme supply. It's worked out here in terms of market direction. What we actually can do here as well is wait for a reaction at this extreme supply, wait for everyone to be trapped into a trade, and then go the opposite way to actually take the low of that range out. If price action does create a higher high though, because price action will do whatever it wants to do, it is somewhat random in a way, then we can wait for a retracement into the next range, and we can look for our confirmations of buyers being trapped, liquidity sitting below, and selling into that. Again, to make a lower low and induce the previous low. That's how we're going to find these trades. So the action steps here, we're dropping down 15-minute, 5-minute chart, even down to the 1-minute chart as well. So what we do that once our zones are marked. And again, wait for price to react. Wait for price to show that it's manipulating people to go into a, for example, at a demand. Waiting for manipulate everyone into a buy, and we actually go into a sell. Again, we want to look for a clear break of structure in, for example, if we want to sell in a bullish direction. Why? Because it's going to mean a lot of traders are getting into buys right now. And again, a retest of that zone will get our entry in the market. So again, this is very, very powerful stuff when you understand it, and it's a game changer. So 15-minute here, what do we see? This is a good example actually, because we can see price makes a low, a lower high, lower low, lower high, lower low. So again, it's really reacting and respecting supply zone here. So what has this done? Look left. Everyone is selling here, right? The Fibonacci retracement, we're at that golden zone, 61.8 to 78.6 retracement. Not only that, we're reacting from that zone. So again, it gives us an opportunity to look for our entry model to go in for a buy. If we look left, what most traders are missing at trade market structure is this. Big resistance zone buildup. That big resistance zone is a ton of liquidity. So if we can get our entry model to go into a buy here, we can actually look to take that liquidity out and look for a move like this. Absolutely beautiful stuff, and we see it in the markets every single day. It's just a matter of finding high probability setups, find the manipulation, understand where the traders are, where the liquidity is here. Look at the chart. It's above these highs. We can spot that. That's when our high probability trades are going to come. Amazing. And again, this is the 5-minute. So getting deeper into an entry model. This could be the 5-minute, this could also be the 1-minute for an entry. So basically what we're seeing is we have a range from this high to this low. Price comes all the way up into our supply zone. Reacts first, initially, does a bearish break of structure here, retraces again, does not break this high, and then has another bearish break to the downside. What that's done is it's created a supply zone here. It's added more liquidity to the upside. But what about the downside? There's not really a huge amount of liquidity. You have this low, you have these relative lows here, but there's nothing concerning about going in for a buy because of the enormous amount of liquidity above. Several resistance zones, several equal high zones, and it just makes sense that price will want to pop up and take out all that liquidity. It could even go lower after that, but we don't care. We understand that this is our intraday move, this is our intraday play to take that liquidity out. And again, just a little bit more closer look without my mess on the screen. we have our big resistance zone, we have our equal high zones marked out as well, and we have our 2 bearish breaks to the downside. Guys, perfect. That's our entry model. Get into a buy. If we're on the 5 minute, we just want to wait that little bit more of a confirmation, scale down to the 1, wait for a reaction from this zone, even a small 1 minute bearish break or a wick to the upside candle, and then we're getting into a buy. Stop loss can be placed below the range, and we can look for that exact same move. That's another way we can get into the exact same trade here. So again, we are on the 1 minute, but the entry model was on the 5, so there's no need for anything else different here. What we are seeing is price makes this high, higher low, higher high. Here we have our bearish break of structure. Here we have our previous range. We can see price respects that. Then we get another bearish break. Wicking this low, entry model is there, and trade is looking to go higher. That's all. It's quite simple, but so effective. And again, you can see the trade here. So again, once price hit the low, the entry was caught, and price just rocketed to the upside. This is perfect, guys. Absolutely perfect. So next thing is you want to obviously manage and exit the trade. Can't let a winning trade become a loser. So again, first target is that liquidity pool. For me personally, I'm closing all at 2R. A lot of my students and our other mentor inside of the currency squad has a partial profit at 2R, and he lets the rest run. My personal preference though, do what you like. I just tell you what I personally do because it works for me. Now, of course, if we're targeting the first liquidity pool, that would be the resistance zone. So especially once price takes this resistance zone out, we want to be going break even. So we want to be putting our stop loss here, meaning that we can't lose any money on this trade. Now, obviously adjusting the stop loss, I don't trail my stop loss. I will basically let this trade now do its thing. So for me, it's going to be a break even trade. It's going to be a 2R trade profit. Great. Now, liquidity sweep will signal our exit. So if price comes up and takes out all these levels that we marked out before, and then starts to pull back, even if I'm not at a 1 to 2 yet, if I'm at a 1 to 1.5, 1 to 1.6, whatever it might be, I will close that trade because I understand that it's taken everything that I wanted to see from the market, and basically then we don't have any guarantees that price will continue to go higher. So I might close that trade there. Again, looking for small moves, small scalp moves in the market, but this is so effective when you know how to do it properly. And guys, my free course is down below. It's the first link in the description, so definitely go and check that out. Tons of value there, and hope you enjoy it. Would love to work with you. But guys, like, comment, and subscribe to this video. There's going to be plenty more coming. As you can see, I'm really pumping these videos out for you guys. I want to give you guys as much free value as possible. So yeah, but we'll see you on the next one. Thanks for watching.